Hey folks, how's it going? It's Erica here, and it's nice to have you back on my YouTube channel. Today I suggest we go over oscillators and try to figure out which one is the best for you. And sure thing, I will show you how you can make money on binary options trading. We'll go deep in this. Watch this video up to the end and you will find out loads of interesting stuff. In the description below this video you will find a link to my Telegram channel where you can ask me any questions. There's also a link to my Telegram channel there where I share my daily trading signals. And there's more to that. I run weekly marathons to increase your capital from $500 to 30,000 bucks, and this happens every week, so make sure you join the marathon. And on top of that, if you text me on Telegram, you will get a link to the PocketOption registration, which will give you a 50% bonus to your deposit, and that's for free. And now we're switching to PocketOption and let's go trading. On my screen you can see the price chart with an open exchange currency pair, the British pound Canadian dollar. The trading amount will be equal to $300 or just 3.3% of my initial deposit. We will open the first trade up for 1 minute for $300. As you can see, two indicators help me with technical analysis, Williams percent range and Arun. And the Williams line took a horizontal position while the price was decreasing. In this combination, I saw a signal about a possible increase in price. Let's see the development, and now let's start our today's topic. Almost each of us at the stage of making this first trade is monitoring the change in the exchange rate of currency pairs. As you know, the market is not predictable, its trends can last for years, constantly forming new highs and lows, and may change every month. In such difficult conditions, a trader needs a tool that can help in market analysis, providing a certain advantage when opening trades. Oscillators have become one of these tools. We'll get back to them very soon. And now the trade is over and we have earned $267. So today we will analyze what oscillators are, how to interpret their signals during trading, and also look at the advantages and disadvantages of this type of indicators. As the well-known postulate says, you can't guess the bottom and the top of the market. However, in technical analysis there are concepts of overbought and oversold zones. They appeared just thanks to special class of indicators, oscillators. Unlike other technical analysis tools, their curves do not follow the trend indefinitely, but fluctuate within a strictly limited range from 0 to 1 or from 0 to 100. Before we continue, we will open another up trade for 1 minute with $300 in. Here, everything seems simple. The Williams line was actively growing, while the price of our currency pair was also growing. And this combination again gave me a signal about the possible continuation of the price growth. And now back to our topic. What are these overbought and oversold zones? Reaching the ceiling is an overbought zone, and in the case of a decline to the bottom, there is an oversold market. The fluctuation of the curve in a rigid range is set by the indicator formula, where the current price is divided by the maximum value of the range in the selected period. In most cases, the curve of the indicator indicates the position of the formed candle relative to the highs and lows. And we take another pause. The trade was completed and our profit again is $267. Moving on. Historical points of transitions from impulses to corrections and vice versa are the zones that can most likely become the beginning of a trend reversal. The overbought and oversold zones do not answer the question whether the pullback will develop into the opposite trend. Moreover, the indicator gives quite a large number of false signals on strong directional movements of prices. Therefore, never use only one indicator. In your trading strategy, it filters the inputs and the highs, not allowing the trader to enter before the market correction itself to avoid getting a loss. Let's resume trading, as I noticed an interesting opportunity and I opened an up trade for 1 minute with $300 in. The trade doesn't seem difficult at all. There was an impulse growth in price while the Williams line was actively growing. As you know, this is an excellent signal about the positive growth in price. We can only wait and let's continue our topic. The oscillator formula I just described is a general concept. Indicators were created and improved for more than 60 years, which led to the creation of nonlinear principles of market analysis. But even the new methods did not lead to the emergence of grails. Oscillators can be used to scale up the profitability of trading strategies when properly combined with the trader's trading style. And now let's look at the chart. And we see a nice $267 profit. Oscillators are the only technical instruments that formulas work perfectly during the consolidation period. The other indicators are designed to determine trends, so they give a lot of false signals during the consolidation period of the market, literally sweeping the deposit. But some types of oscillators, for example MACD, are able to work both in the flat period and in the trending market. Due to the use of smoothing values and formulas, some types of oscillators combine leading and lagging signals on the chart, which greatly simplifies technical analysis. Let's go back to trading, and this time we will open a $300 down trade for 1 minute. I made this decision because of the transition of the Williams line to a horizontal position, and this is with a very active growth in the price of our currency pair. This gave me a signal about a possible decline in price very soon. Therefore, we will check this signal, and at the same time we will continue to study the oscillators. Oscillator signals, as you may have already seen, are easy to visually analyze for beginners and convenient for professionals who easily combine them with complex trading strategies. As I already noted earlier, the reason for creating the oscillator was to determine the zones of possible reversal of price during the fall of growth. At that time, traders sought to increase their earnings by catching reversals and corrections. And now we're looking and we see an exciting conclusion, but nevertheless I have increased my balance by another $267. Let's keep on discussing oscillators. The oscillator curves follow the exchange rate of the currency pair, repeating the peaks and movements of the trend, but sometimes there are discrepancies. Such discrepancies are called divergences. They are also often called golden signals. This does not mean they have high accuracy, but their appearance definitely leads to a temporary stop of the trend. Let's continue trading and open another up trade for 1 minute with $300 in. My previous expectations about the decline in price were not justified, and if so, then the price can continue its growth. Moreover, this is confirmed by the data of the Arun indicator, because its blue line responsible for the uptrend is at the level of 100, but the red line is around the level of 50, and this gives a signal, not very strong, but still a signal about a possible increase in the price of our trading asset. Let's continue. The average line of the oscillators is an additional confirmation that the overbought or oversold market has led to a reversal in the opposite direction. By choosing the right type of indicator, a trader can successfully open trades for a long period while the curve or histogram is in one of the zones. And another trade has closed at a profit, and I made $267, but this time it was very close. Let's go back to our topic. Despite the various signals and the functions of oscillators, each indicator was created to solve a certain task. By understanding these functions, it will be easier for a trader to create a trading strategy or to understand the principles of signal analysis in complex foreign strategies. There is no rating of indicators in the foreign exchange market due to the complexity of such an assessment. As it has already been noted, a trading strategy of several instruments can bring profit. It is difficult to determine the individual contribution of each indicator. Back to trading, and I open another up trade for 1 minute with $300 in. The signals haven't changed since the last time, so I'm not changing the direction of the trade. I propose again to monitor the development and continue our topic. Yes, it is impossible to determine which oscillator is the best, but on the other hand, it is possible to know that most common of them which are included in many strategies. Among them, the stochastic oscillator is in the first place, and I already showed you how to use it in previous videos. The MACD can be placed in the second place. The oscillator gives a whole range of trading signals and various options for their use. Traders give the third place to the RSI as the simplest indicator in analyzing the overbought and oversold zones. And now we look at the chart. The trade is smoothly completed and the next $267 is sent to our pocket. This concludes the trading session and we're ready to have a look at the results. The 6 successful trades we've made today allowed us to earn $1,602 of net profit. Of course, not all trades went smoothly and easily, but we know that the market is unpredictable and things do happen here. To recap on our conversation, I want to note that Forex is different from securities and commodity trading instruments in that its movements are more technically predictable. This is the reason why you cannot do without oscillators, but the choice of a particular instrument will largely depend on the trader's trading style. Despite the listed popular oscillators, the traders should remember that with the same strategy you can get different results, and instruments that work according to similar principles of determining overbought and oversold zones can always be replaced if it doesn't affect profitability. I do hope the information you got today will help you make money on binary options. At the end of the day, it's only practice that can teach you understand the market. And before I say goodbye, I want to say a big thank you to you, dear friends, for being with me all through this video. I do appreciate it when you like my videos and leave comments. I read through all of them. I see a real return on what I do and what I share. Besides, if you found this video helpful at any point, why not give it a reaction, a comment or a like for the YouTube algorithm, or even a share. This is my reward and a sign for me that I should continue creating cool content. That's about all for today. Good luck in the market, take care folks, and see you soon in the next video.